Hi, I'm Ross from Smith Property Accountants, and we're just going to discuss some, simple deals, simple case studies that could be taxable. Everyone, as soon as you go looking at selling a rental property, is it taxable? Everyone's going, oh, Brightline, it's outside Brightline. Brightline doesn't matter. Um, Brightline is just one of many ways that you can be taxed. So be very, very careful on that. So I've got two little examples we're going to run through today. One is Brightline and one is not Brightline. So the first one, your personal home. Obviously, the government always says that your personal home is not taxable. The gains on that are not taxable. Obviously, that's untrue. So a classic example, say you're under the 5-year Brightline. You bought the property back in 2019, and maybe you bought a section. This section's your intention, you're going to put your personal home on it, you're going to build your personal home, and you're going to live in it. So you bought it in 2019, you owned the section a bit, and then you built a house on it, and that took 2 years for you to get through that process. So the first 2 years, you're building that process, and the section is empty. And then you live in that house for a year. If you sold that property, it's not predominantly your personal home. Not in it for 2 years, in it for one, therefore not predominantly your personal home. The sale of that property is taxable. So if I just go through that again, so for your personal house, we're obviously, under the 5-year Brightline, which is 2019 falls under the 5-year Brightline. Buy a section in 2019. It's empty for a bit. You build over the next 2 years. So you have a 2-year period of it being empty and built. So it's not your personal home for that period. Then you live in it for 1 year. You're only living in it for 1 out of 3 years. It's not predominantly your personal home. If you sell that property, you're going to get caught under the Brightline rules, and the gains are going to be taxable. Often get asked, how's that taxed? Well, it depends on who owns it. If you own it in your personal name, that income is going to get added to your personal income. And if that pushes you over 180,000 income, you're going to get taxed at 39% on that extra part. If it's in a trust, you'll be taxed at 33% in the trust, or you can distribute that profit to the beneficiaries. It'll be taxed at their rates. So you're different depending on who owns it. So that's our first one. Personal home, yes, it can be taxable. Second is, what about if we talk about a section, it's a rental property. You've bought a section and you're going to build a rental on it, and you're going to keep it long term. So you bought this section back in, 2016. You've owned it for the last 6 years. It's outside of Brightline. It's not taxable under the Brightline. It's been owned for 6 years. It's obviously past the 2 of the 5-year Brightline rules. So you're not taxable for Brightline. You then decide that you're going to build a house on it, and you're going to build it and sell it straight away, and hopefully make a gain from doing that. So you're not caught by Brightline, but you've got to look at your other taxing provisions. So first thing we'd look at, is that liable for GST? And it could be liable for GST. So as soon as you're doing builds and sales, subdivisions, you need to consider GST, and it gets down to the real technical. It could be either. It could be GST, or it might not be GST. But you need to consider GST with it. Second, you're building a house with intention of selling it. Even though you're past Brightline, you're caught by other taxing provisions. And in that case, your profit on that build is going to be taxable as well. Really careful that you think about things, and you don't just go, oh, it's outside Brightline, we don't have to worry about it. You need to think about more. So that's two examples, one for the personal home, one for a rental, where you're not getting the personal home exemption, and for a rental, even though it's outside Brightline, it's taxable. And there's so many more examples for rentals. There's lots of different ones. So standard, like a subdivision, is if you subdivide and sell, standard answer would be it's taxable. And then there's different exemptions we can look at. You build a house and you sell it straight away. Generally, you're going to be caught under a different section. Rezoning you can be caught for, and that's one that's often overlooked. If you're a builder, there's different rules. If you're associated or tainted, there's different rules. Be very, very careful that it's not just Brightline. Hopefully you found that helpful. Thanks a lot. Bye.